Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update for commodities. Work our way through dollar yields, precious metals, and commodities and ETFs that I follow. I'm going to give you I'm going to interject my financial opinions across the board here. And if you need any help, check out finding-value.com. So let's dive in. Let's take a look and see what's going on with commodities today. The dollar, this still looks like it could go a little bit lower, perhaps. Again, we're in an indecisive period. I don't know if interest rates know exactly where they're going to go, but and the dollar usually follows interest rates. Either way, we've got resistance here with all those wicks. We sold off, and this is a small little profit-taking day, which generally works its way down lower. So that's an inverted bloody nose. U.S. 2-year yield heading higher today, 1.8%. Is this thing going to rocket higher? It kind of looks like we've got some strength behind it. And it's one to watch to see which direction it's going to go. This is inverting the curve because the short end of the curve went up more than the long end. And right now it looks strong to go higher. The 10-year's up a little bit, but it could go either direction here. We've got strong bullish candlestick there and a bearish one there. That's a bearish piercing candlestick, which generally works its way lower, but there wasn't much follow through today. So I think that's pretty well balanced there. And then the 10-year or the 30-year, you've got another one that's fighting back and forth, bullish engulfing here and a bearish piercing there. And so I don't know if the interest rate market knows which direction they really want to push this stuff. The TYX-TNX ratio is still inverting more. So they're inverting, but it's at a very low level. So big picture view, guys, it would have worked well to have purchased gold in 2000, gold in this bottom here, gold down here in 2018, and then I'm sure it'd be good to buy gold down here. And every time we see this ratio go up, gold goes up with it. Bond price is down 0.14%, just a little guy there. Again, this is just inverse of what yields do, and I don't know if yields know which direction they want to go. Recessionary fears, yields go down, people run into bonds. Inflationary problem or problems with the debt markets, yields go up. People don't want to hold debt. Gold, it doesn't like that higher dollar, doesn't like the higher yields and that inversion of the yield curve. So gold basically down a little bit, $5, but that still looks good. It still looks good to go higher above support on a longer term perspective. Silver still looking good to go higher, little bloody nose, and then platinum also still looks okay. We've got one large up candlestick here, and then the 3 down candlesticks. So it's like, boom, they hit the pressure, and then it just leaks off selling pressure. Boom, leaks off selling pressure. You like those writings, don't you? XAU to gold ratio, slightly lower today. Does not like the inversion of the yield curve and the higher yields. And that's what drives gold and silver, a lot of it. It drives all the assets, really. Haven't broken this downtrend line yet. We still need to do that. CRB to, no, this is the CRB index. Slightly lower, hitting this resistance line right through here. We could see a little bit more of a sell-off in the shorter term. CRB to S&P 500, the ratio still right around 0.618 fib retracement level. 0.618, hanging right around it. That's generally where it bottoms out in a wave 2. Wave 1 is this big guy coming up, and then we get a pullback, and then wave 2 generally goes to 0.618. And then GDX, it is lower. I expect this to be lower today. We had increasing dollar, increasing yields, an inversion of the yield curve. This is going to sell off a little bit. So we see that across the board. A little bit of a sell-off in each one of these. Again, gold does very well in the uninversion of the yield curve, kind of the fear trade before a recession. And yields generally go down, not up. Crude oil, this doesn't get impacted by yields as much, so it kind of just floats around. but it's slightly lower today, minus 1.3%, still above support. We'll see where it goes. Natural gas also still trying to find a bottom here. XOP, yeah, you know me, still looks good to go higher based off of the chart pattern. Coming down, broken trend line. We've got large, big buying green candlesticks, small red candlesticks. That usually works its way higher, and OIH also has that, higher. So I usually see these little candlesticks occur, and with big green ones that work its way higher. Sprott Physical Uranium Trust still looking good. Came back down today, but got bought back up. There's your move lower, and then right back on higher. So momentum's to the upside, and we'll see where it goes with that momentum carrying to the upside. Uranium still looking all right. We do have a small down day today, but it is a bloody nose and a continuation pattern to the upside. I'd really like it for it to break and hold above, $38 or so. URNJ doing the same thing, little bloody nose today, right underneath resistance. We just got to break up. TAN down a little bit, but still, what is this thing going to do? This could drop down. Guys, short term is really tough, always reading these things. We've got a bullish engulfing here. We've got a little bit more selling pressure coming down in here. And is this a flag pattern that's going to break to the downside? It is possible. I know some people say, oh, you're hopeful that it's going to break to the upside. Well, I mean, that's what short-term analysis is. It's not 100%. And right now, the data is saying that we could actually pull back in the short term. These assets are all sensitive to interest rates. And right now, interest rates don't know the direction. The reason it doesn't know the direction is because you can have a recession without the housing market getting crushed. But the housing market is generally a good driver of the economy. So if the economic engine continues to grow, construction jobs and all that type of stuff, then we usually see interest rates go up. So the market, I think, is mixed on where interest rates are going to go. Those interest rates are pricing all these different assets, and that's why we're seeing these large sideways movements on where are we going to go next. I mean, that's really what they're asking. COPX down 0.21%. We're losing a little bit of momentum here. This could go either way, up or down. Kind of at a decision point here. Lithium right on resistance. There we are in this pattern. A lot of people say it's a falling wedge. It's going to go up. Well, it doesn't have to, but that's where the statistical probability is. So we'll watch and see if it goes a little bit further in the corner here, or if we break out here immediately. REMX is doing the same thing. It's right on support resistance. So we're hitting our head on that. We could fall back down, or we break on up. We'll have to wait and see. S&P 500 up 0.12%. We'll see which direction this goes. Again, this is all based off of interest rates. And with interest rates not really knowing where they're going, I don't think the markets know where they're going to go. So they're going to meander here. It could be volatile in both directions, up and down. Just like the composite NASDAQ, this is a bearish candlestick there, that red candlestick there. We kind of popped up again. This looks like it could fall over, head lower. And that generally would pair itself with increasing interest rates. Emerging markets, a little bit stronger dollar today, still slightly higher, 0.45%, just kind of basing sideways. The housing market, or home builders, I should say, we're above support, and let's see if that support holds here, if we're going to do a little bit of a retest before heading higher. Moo down 0.62%. This does look like it's trying to put in a bottom. I would say that this is most likely going to head higher based off of the candlesticks in there. Copper, right up against resistance there. Right up against resistance. We've got iron ore that's pulled on back. Still looks good to go higher eventually. We could have short-term little selling pressure, but still looks good to go higher. Nickel, Nickel's just moving sideways here, trying to base out against the support level, going across right through there. We've got aluminum going sideways, looking like it's trying to get some support right where it's at, but that does look like it could go higher in the short term based off the broken down trend line, the retest, and the big candlestick. It's a bloody nose today. Baltic Dry Index, we've got a higher low, and it looks like it's trying to work its way on higher here, so that looks okay. Newcastle Coals, give it some time, guys. This is going to take some basing. We've got a large pullback here. Ethereum down a little bit, 0.71%. It's still in that support area. Same with Bitcoin. It's still in the support area. Just let it kind of hang out. We'll see where it goes. Right now, you got to keep in mind, guys, everything gets priced off interest rates. And if interest rates are volatile and don't know where it's going to go, it's going to swing the markets back and forth, being very kind of volatile in either way. Or we just go sideways for a long time until rates determine where they want to go. Lower rates, precious metals do better. Higher rates, generally that's an indication of inflation. So generally oil, fertilizers, stuff like that do very well. So right now, we've got the short end of the curve, the 2-year going up. We've got the 10-year going sideways and the 30-year kind of going sideways. A lot of people say we're going to have this recession, interest rates are going to drop. We got to see that. We're not seeing that in the 2-year yet. It doesn't mean it can't happen immediately, but I'm just not seeing it yet. So it's putting pressure on some of these markets and some of these assets to go sideways. And that's what we're seeing in the short term here. I think we're going to see a lot of sideways action for a while until it breaks, whenever that is. So that's what I've got for today, guys. Thumb up for the content, subscribe to the channel, subscribe to the website if you like. We've got a 7 a.m. Mountain Standard Time question and answer session tomorrow on Saturday. So we'll see you there. If you're a Platinum member, bring your questions. I'll answer whatever we've got. And that's what I've got for today. So we'll catch you next time. This is Finding Value.